Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and what we're going to talk about this morning are, of course, the pre-market activity in the futures market. We're going to talk about the economic data that's set to be released today, and we'll also talk about Germany and how Germany is just rolling over into recession. I'll go over a headline off of Zero Hedge, but let's get to first. If you could do me a favor and click that like button, subscribe to my channel. It really helps me with the YouTube algorithms against the big guys. And leave a comment below if you have any suggestions or feedback. I would love to hear from you. And let's begin with the economic data that is set to be released this morning. And at 9 a.m., we have the Case-Shiller Home Price Index. Absent a big miss, I don't expect much out of the Case-Shiller number. Now, what's important is to wait for the 10 a.m. consumer confidence number. That's an important number. I wouldn't expect a real bad number unless, of course, we see job cuts. But as long as there's a consumer credit out there, which there's plenty of, and plenty of debt, the consumer's happy, right? We've been conditioned. As long as we have a credit card, we're good to go. We're happy until, of course, those teaser rates expire, everything normalizes, and the banks just cut your throat. But that's not right now. That's in the future. The American people, we live for the now, so I wouldn't worry all too much about consumer credit at current. It's going to become a problem in the future. Consumer confidence should be buoyed by consumer credit. So let's take a quick look at a headline off of Zero Hedge. The collapse of Germany is real and accelerating. And this really speaks to what I'm going to talk about tomorrow morning, which is the shorting of the stock market. I'm not going to go into it this morning. Please join me tomorrow morning. I'll go into it in greater detail about shorting the stock market. That will not occur this week. This is a longer term setup. We'll be using weekly and monthly charts to identify when it's time to get out of this market and to make the big bucks to the downside. But it is not right now. I am not predicting that we're going to crash right now. In fact, I believe that we're still going to break out to the upside into the 2020 elections. But we need to get prepared for when the elections are over. Now, back to Germany. Take a look at this chart here of German manufacturing. They're one of the biggest manufacturers in the world, by far the largest in Europe. And you can see here that the manufacturing figures have been in a steep decline ever since 2017. And back here at the beginning of 2019, the ECB went, as they call here, well, as they say here, full dovish. Right? What's happened? It's only gotten worse. It doesn't work. QE does not work. And at some point in time, after the 2020 elections, when President Trump doesn't have to worry about re-election, is he going to continue down this path of maniacal bank financing of our debt and the financing of the stock market? Me, knowing President Trump, I followed him for many, many years. I met the guy many years ago. I've been following him for, I don't know, since the late 80s when he went to war with Mayor Koch over the Woolman Rink. He's a pragmatist. He's not a Republican. He's a regular guy, and he's a pragmatist. So I'm concerned about his support of the stock market after he gets reelected, because what's the best for the country? Is it the support of the stock market, or is it getting real with the economy and trying to salvage it before we go full bust? We're going to go bust, but is it going to be overly damaging to our children's children? Forget our children. They're already kind of screwed. Forward looking, will it be our children's children that are going to get damaged by this blow up? So this is Germany in a single chart. It is not looking good for Germany, and in all probability, it is going to get worse. Now, let's segue over into the pre-market activity And we'll begin with gold, which skyrocketed higher yesterday. And we are down slightly on the morning, no shock. I would expect a pullback. And we're looking for a breakout here. Now, the only thing that may hinder gold in the short term, this is a 4-hour chart. Most of these will be 4-hour charts. The only thing that would hinder gold in the short term is if we get a risk on event, meaning that people start rotating into stocks, right? So what I want to do next is rotate first into the dollar. This is our breakout point. This is what I want to see gold break through before we get more excited. I want to take a look at the dollar. Then I want to take a look at the stock market futures because they spiked after hours yesterday on not much news. So first, let's get through the dollar. The dollar's consolidating, behaving very, very well. Think about what's going on here, right? We have the Federal Reserve that's back in QE mode, yet the dollar is ripping higher. It's breaking out. Why? It's because the ECB and the European Union is just such a fiscal basket case. They can't get out of their own way. They make the dollar look good. So at current, with all the geopolitical risk and the fact that the EU, with Brexit right in front of us in October, right around the corner, the dollar is going to keep a bid underneath it in the short term anyway. After the Brexit vote, if in fact there is a hard Brexit, you'll probably see a spike in the dollar. If they negotiate a deal, at that point in time, if you see a soft Brexit, you'll see the dollar pull back and perhaps even gold as well. But I think the gold trade would be a pullback off of a geopolitical risk coming off the table, but you still have 22 trillion reasons and rising why gold is going to continue higher. Now, let's talk about a potential risk on event here. S&P 500, you could see that after the close last night, we moved higher. We're up over a third of a percentage point on the morning. So what am I looking for here on the S&P 500? I'm looking for a breakout above this upper band of resistance. Now, I said earlier that I was, and if I haven't mentioned this already, click that subscribe button, hit the like button, leave a comment below, please. Again, it really does help me out. And thanks for that like, please. Thank you very much. I'm looking for a breakout here on the S&P 500. And it's probably going to be, if we get that breakout, it's probably going to be game on to the long side. New all-time highs for the S&P 500. But I'm not making that call until we get the breakout. In all probability, that's what's going to occur. And that's going to probably hamper gold's momentum in the short term. The same thing goes for silver. I'll go to a chart of silver in a moment. Let's take a look at the NASDAQ this morning, the NASDAQ 100. Again, same deal here. Note these Bollinger Bands, how tight they are. So it's a nice setup. The trend, for the most part, is a bias to the upside. So with the tightening Bollinger Bands, which direction would I expect the break to go, up or down? I would expect that the trend remains intact and that we break out to new all-time highs. So what I'd be looking for here is a rally up and through resistance, a retest, and it's probably going to be game on to the long side. And I began this commentary off, this live stream off, saying, I'm looking to short the market. Not right now. Not with the Federal Reserve supporting the market. Not with the 2020 elections directly in front of us. I'm formulating a strategy of as to when I want to short the market. Not right now. I'm not going to fight the Fed. Not going to do it. So let's take a look at the price of oil. Oil has broken out on a 4-hour basis. We have pulled back, but no follow through to the upside yet. I think that we're probably going to get it though. And if we don't get it, if we get a pullback on oil, believe me, there is going to be saber rattling over in the Persian Gulf, spiking the price of oil up. The president has done it time and time again. There's no reason to expect that he's going to do anything different moving forward. Why? It's all about the junk bond market. It's all about the frackers who are financed by the junk bond market and retention of jobs in the United States in the fracking industry, which pay well over $100,000 per year. He's not going to lose those voters. It's not going to happen. So expect a bid under the price of oil. I would even expect a rally in the price of oil into the elections. Not too much, though. That's inflationary, and the American consumer is not going to like it at the gas pump. I think he'll be satisfied with the status quo. Now, taking a look at silver, silver had an outstanding day yesterday, and I think that it is going to continue. I mean, again, this is a 4-hour chart, and we rallied up and through the third standard deviation Bollinger Band. We've pulled back. We flashed a bullish reversal bar overnight. No follow through to the upside yet, but I think that we're probably going to get that continuation move higher. We did rally up and into resistance on gold and on silver. So I would expect a little bit of consolidation here. That's a good thing, especially if you get a risk on environment with stocks moving higher. You'll probably, at best, you would hope for a sideways consolidation on the precious metals, perhaps a smaller pullback. That's okay. It's a pause that refreshes. And I would look to build a position on silver and on gold. We were building on silver last week. And in all probability, if we get a nice orderly pullback, then a breakout, we're going to look to add more to the trade. What else? If you have any comments or if you have any chart requests that you want me to go over, drop them in the chat box. I'll go over them while we have a little bit of time here. We have about another 10 minutes. Let's swing over to the bond market, and then we'll talk about the charts that we've been watching for the past couple of weeks. So the 10-year bond price is down a little bit. That explains why you're seeing a little bit of weakness in gold and silver. No big deal here. The Federal Reserve is putting a bid under the bond market. I would expect that bond yields should continue to drop and that bond prices should continue higher. When that ends, it's going to get real ugly real fast in this market. It's not going to happen right now. The Federal Reserve has all but admitted it. They are out there. They're buying bonds. They have a bid under the market. Don't fight it. Let's take a look at some of the charts that we are watching. We're going to use TrendSpider. If you're interested in TrendSpider, they are a sponsor of ours. In the link below, or in the comment section below, you'll see a link to their website. You can check them out. And there's also a discount code, CT25Z, CT25Z, and that gets you 25% off of their product. So we'll talk about IWM tomorrow morning, so please check back with us. Let's talk about the DPST, which is the Regional Bank ETF. I want to go to a daily chart, and you can see that. We'll take the automated trend lines off first. You can see that on a daily basis, we went into the week with a bearish reversal bar on Friday. Then, hey, good morning, Trent. I talked a little bit about bonds already. Do you want me to go back and talk about something specific, the TLT, something like that? Let me know, please. Okay? So the DPST is went into the week, bearish reversal bar on Friday. But yesterday, we had a reversal day. We didn't close at the highs of the day. So I'm not 100% excited. But when you put your automated trend lines up, we closed above support. We broke down, reversed to recapture. The only thing that concerns me about the regional banks is that the Fed is helping manipulate bond yields lower. That does not really help the regional banks all that much. So I'm concerned about that aspect of the trade. But if the regional banks, despite the Fed keeping rates artificially low, continue to break out here, that's a tell. That's the market saying, you know what? The Fed at some point in time may lose control here, may not have as much control over the market. And either way, the regional banks don't care. They're undervalued and they just want to go higher. So we need to pay attention to what the market is telling us here. Weekly view, we are in a downtrend channel, and ideally we break out and above this upper band of resistance if we get it. If the Fed is still manipulating markets down, rates down lower, if they're not, if the regional banks break out above this upper band of resistance, it's game on. You need to buy. The regional banks will be watching. I'm going to set an alert here. I want to know when we get this breakout on the regionals. So weekly breakout. Okay, so in the meantime, if it was optionable, I might decide to sell some puts, but unfortunately, DPST does not trade options. So we're good to go here. I could forget this chart. I'll be reminded if and when we break out on DPST. I'll check back from time to time on a daily basis. LABU, good stuff, Trent. Yeah, I like the bullet. I like the DPST and the regionals, but I'm concerned about the Federal Reserve and the net interest margins of the DPST getting affected by them. However, the tell here is the contrarian play here is that if the Fed keeps a cap on lids, if they keep them artificially low, and the DPST continues higher, that's a tell. The market's telling you they're taking them higher no matter what. They're being accumulated and we want to buy despite what the Federal Reserve is doing. If we do break out, let's go back to that chart for a moment. If we do break out above this upper band of resistance and we buy at that breakout point and we roll over and fail to hold it, what's our risk here? If we fail to hold it on a weekly basis, right, we put a stop loss on that failure to hold support, very small downside risk with a ton of upside potential. This is why I like the trade, if that makes sense. So a lot of reasons to like the DPST, some to be concerned about, which I've already articulated. But if we begin to break out, my opinions are worthless compared to Mr. Market. And we listen to Mr. Market all the time. And if you're not listening to Mr. Market, please click the like button. I beg of you. It helps me a lot with YouTube. And leave a comment, subscribe. Click that bell button, please, and you get notified of future live streams, okay? Thank you. Let's take a look at LABU. One of my favorites to sell puts on or sell bear put spreads on. Actually, I'm sorry, bull put spreads on. I like the setup here. We are flirting with the breakout on a weekly basis. We're not there yet. $40 per share is the ideal number I would like to see a close above. This chart is saying around 40, yeah, about $40.30. Let's go to a daily chart, be more specific. We need to see a rally up and through this resistance level here. And it's saying around 40 bucks a share. All right, so want to see it break through. And this here, I may not buy. I may open up a bull spread or just sell puts and just generate some income. And again, folks, if you have any requests for me to put In the chat box, please leave a symbol. We have a couple of minutes to go here, and I appreciate your time, and I want to make the most value out of it. So drop a symbol, and I'll take a look at it for you. I want to keep this alive for a while because LEBU is a lot of fun to trade. All right, so we're good there. And we'll take a look at one that I've been taking a look at lately. It was a member's stock chart request. Parker Hannifin. Here it is. And Parker Hannifin, I'm looking at more so, you can see I already have an alert set up here on a monthly basis. I'm looking for a breakout here on Parker Hannifin. We already have a breakout on RSI. I'm going to look for a pullback on a monthly basis. The month is almost over, so it's not too much to ask for here to get a monthly pullback on RSI and a retest, a validation of what was resistance for several months should now act as support. That would be a leading indicator for a price breakout on Parker Hannifin monthly basis. So at current, we've been flirting with a breakout here on price. No follow through yet, but we do have it on RSI. So Parker, we are watching as a potential long. Here's a weekly view. You can see that we broke out several weeks ago on RSI. No breakout yet. We've been flirting with it. We're looking for a breakout here fairly soon. So Parker looking really good. And if energy continues higher, Parker should continue higher as well. Now, one that I want to bring up here is Cure. This is a weekly setup, and Cure is in the healthcare sector. So if you don't want the risk, this is a leveraged ETF, not for the faint of heart, okay? If you're risk adverse, this is not for you. If you like the volatility, I like the volatility. This is for you. It's great. If you want exposure to the healthcare sector, look at the HLV, okay? It's less volatile, but it gives you the same exposure. Now, on a weekly basis, you have a breakout. BHP, I'll take a look at that next trend. You got it. You have a breakout on a weekly basis last week. This week, we are retesting the breakout point on a weekly basis. If we hold, that's a buy signal, especially if we rally through the highs of last week. That would be a retest and a continuation move higher. Now, looking at a daily chart, I think that on Friday, you saw some topping action as you did on Thursday. It was a reluctant breakout. You saw some profit taking into that breakout. We're probably going to pull back a little bit further here. Ideally, we get the retest, and we'll be looking to put on a long trade for Cure. And this is not going to be a multi-day swing trade because we are breaking out not just on a daily basis, but on a weekly basis as well. And I'm looking at a price target of up to $60 per share, thereabouts, subject to change. Now, Trent, you wanted me to take a look at BHP? Let's take a look at it, brother. All right, so I have my thoughts on BHP weekly basis. Let's first go with a monthly basis to get a feel for where we've been and where we may be going. All right, so BHP is interesting in that we are in an uptrend. We have a clear and defined upper band of resistance, in fact, not one, but two upper bands of resistance, which is fine. The good story here, the good news is here, is that we're pulling back and we're retesting the lower band of support. So what you have here forming is like a megaphone formation. Here's the rising upper band of resistance, but you also have a declining lower band of support. So you want to see the support level hold on a monthly basis. And if we close out the month at the support level, that's good. If we close down below it, you want to avoid like the plague. I think that given the fact that BHP is a materials play, levered to commodities, especially gold, they should do fairly well in this market environment. Back to the weekly chart though. Here's where it becomes a little bit sketchy. So we have a descending wedge formation. We've been rejected at this upper band of resistance a few times now. I would really need to see, before I got overly aggressive with the shares, I would want to see a breakout above this upper band of resistance on a weekly basis, scratch the itch at that point in time, that meaning stay small. Once you get a continuation move higher, up and through the highs of the week of the 16th, then you can become a little bit more aggressive. I would build on that position, daily chart. So we're pulling back. We have the rising 50 period move, actually 20 period moving average, which should act as support. So for whatever reason here, it may be due to, I believe that they're exposed to copper as well. I'm not sure whether or not it's because of the weakness in copper of late, but the price action is kind of disconnected with the price action relative to gold. And now I don't have an overlay of the price history of BHP relative to gold. I would normally do that if I was looking at the trade, because if they trade in tandem and we're seeing a disconnect, that's a concern. Why do we have a negative divergence? I need to do a little bit more homework on this trade before I got long of it. But for whatever reason, I'm making the assumption that there should be a correlation between precious metals and BHP's share price. But we're not seeing that right now, and that would be a little bit of a concern. So I'm leading the back half of your question, Trent. Yeah, I think that I'm a little bit cautious on it right now. I'm not necessarily bearish. I certainly wouldn't short BHP. I would be very, very cautious. 500 years worth of copper. So let's take a look at copper. So if they have 500 years worth of copper, that means they have an abundance of it. And again, this would not help me in definitely pulling the trigger on the trade of BHP, but it helps. Now, a couple of things here. This is a 4-hour chart. A couple of things that are interesting. One concerning, not, and then another not concerning. Okay. So the first thing that jumps out at me here on this 4-hour chart of copper is that we have a head and shoulders setup. Left shoulder, head, right shoulder. But we broke the neckline. That was the negative, right? But we broke the neckline, but we have since recaptured the neckline. That is bullish stuff. So I find this interesting that we've recaptured this morning. That's a sign of strength, but this is only a 4-hour chart. We want to pull back, take a look at where we've been. Let's go with a weekly view. All right, so weekly view here, we are seeing lower highs. Okay, so we're still in a downtrend. And we are still seeing lower lows on the price of copper. So there's good news here. And the good news is that what we're doing on a weekly basis, now remember, it's only Tuesday morning, right? We still have 4 full trading days left to go for copper. So all this could change. But what we're doing at this point in time is that we're attempting to recapture this lower band of support. Now, last week we failed to hold it. It was a break below key support. So I'm not going to think about copper or BHP until very close to the end of business on Friday. If, in fact, let's make the assumption that BHP is leveraged to copper prices, then, and I could do more research using stockcharts.com and doing overlays. I don't have time this morning to do that. But if, in fact, at the end of the week, this week, we see a close above this support level, actually resistance level at current, then you look at the chart of BHP, see if BHP is reacting in the positive. Is it responding to the strength in copper? If so, then you can look to open up a trade, scratch the itch on BHP, assuming that you're beginning to see breakouts on a daily basis, weekly basis, etc. All right, so stay small until ultimately you get a breakout on the weekly basis and a continuation move higher, if that makes sense. And with that, that's it for this morning, folks. Again, it would really help if you could leave a comment below, subscribe to my channel, click that bell button, and leave a comment below if you want me to do anything different on these videos. I spend this time really to dedicate to you folks, how I can engage with you and help you get more value out of these videos. So I really appreciate your time this morning. Everybody have a profitable trading day and be well.